Good afternoon, everybody. Welcome to Paul's Monday Market Update number 222 for Monday, 20th of April 2026. Hope you're all well. Hope you've enjoyed the weekend. Hope you've enjoyed another interesting end to markets last week and start of this week. Lots for us to talk through and go through as always, and you're very welcome here. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, looking at strength and weakness within FX indices and commodities markets. I look at some charts of interest that you might wish to add to your watch list, and then I look at the live markets themselves. It is not a signal service. It is not trade recommendations. It is just me sharing with you what I'm looking at the moment, which may be of relevance or interest to yourself in your own trading endeavors. As always, you are very welcome here. Just remember that you are always responsible for your own trading decisions. And if you want a little bit more education this afternoon, you can join us for the Active Trades Monday Market Matters webinar at 2 o'clock London time. You can either register on their website or use that QR code. And today's educational piece will be the power of the 20-period moving average. And if you want a little bit more support in your own trading endeavors, you can join the VTP Trader Accountability Group, just helping to build discipline, accountability, and consistency in your own trading endeavors. There's a bit.ly code there, there's a QR code there, or just ping me if you'd like some more insight. Okay, let's dig into the data. What is this? What's this telling us? Well, this is just some snippets from my own weekend work, my own model, the STAM, where I'm looking for strength, trend, and momentum within both the FX and then indices and commodities markets. The idea being that by identifying where's the strength and the weakness, it allows me to focus my time, energy, and resources better for the week ahead. So, what is this telling us? How can it help us? Let me just bring up the old drawing tool. We are in to week 17 of the year so far for the 20th of April. Where's the strength? Where's the weakness? Well, part of that is kind of interestingly sort of played through by the sort of the events of last week and how that affected markets. But where it leaves us is it leaves us with kind of Aussie dollar sort of having returned to the top of the pile there. Okay, and that's just a real indication of sort of war off, risk on. Sentiment overall. Interestingly, Swiss franc kind of also sort of nudged its way back into that second place as well, which is kind of interesting because the SNB have been pretty open about their sort of manipulation in markets as part of their own sort of policies as the war has gone on. So to see that Swiss franc strengthening has kind of has been a little bit interesting in that sense. Some of that came at weakness within the sort of the euro. Euro initially did very well in the kind of anti-dollar, anti-Trump sort of war-off trade, but invariably people are sort of kind of have, let's say, graver concerns about the overall economy in terms of its impact based upon the sort of impact in terms of energy supplies. And that also reflects a little bit on sterling. Okay, sterling's there, middle of the pile. It had done well as a bit of a kind of that sort of war-off risk on play. But invariably now what we're seeing is we're seeing more, let's say, political shenanigans in the UK. Prime Minister Starmer is going to make an announcement at sort of 3 o'clock this afternoon, all to do with the Mandelson affair, and also sort of just impacts about the sort of overall general sentiment towards him and his government. His premiership is kind of imploding like an Arsenal Premier League challenge, some might say, which is also a little bit like the ceasefire as well, because everybody was war off, risk on, but invariably there's been more shenanigans over the weekend, and so markets are a little bit, I'd say, in a little bit of a kind of a paralysis mode today. They're kind of just trying to work out what the score is, which way we particularly going. That's probably reflected a little bit in There's some nice, a couple of nice sterling short trades for me this morning on the intraday basis. But as you can see, it's kind of a pretty flat, pretty mixed at the moment. They'll be waiting for invariably the American markets to come in. They'll be invariably waiting for Trump to say something, and invariably they'll be waiting to see if there is any confirmation of ongoing further talks with the Iranians. And I think markets are a little bit flat from that. But last week, what we saw was definitely that sort of war off, risk on theme, impacted the dollar massively. Okay, we've gone from top of the pile to almost bottom of the pile in the fact of 2 weeks. And as I said, that is just an implication of how that US dollar was the real risk tool for during this period of conflict. Japanese yen still sits at the bottom of the pile, but if you look at the momentum, certainly for me on my thing, the momentum is changing there a little bit, and so we might want to keep an eye on the Japanese yen as I say to people on the BTP stage 2, when you're at the bottom of the pile, the only way is up. When you're on the top of the pile, the only way is down, and that's what we keep an eye on. Kiwi dollar, okay, kind of sort of, it has just done well out of that sort of dump of US dollar. Canadian dollar is still kind of sort of fair to middle in there, okay. It had dropped a fair bit as oil prices have dropped, but then of course we had, I think it was like a little bit of a 5% bump overnight after some of those events in the Gulf, and the Iranians sort of having declared on Friday that Strait of Hormuz was open to all commercial traffic. Then invariably this morning they've said that's not the case and stuff. And so, there's a real kind of flip flop going on there, and I don't expect that to change massively this week. So as always, make sure you're on top of your risk management, make sure you're on top of the order flow, make sure you're on top of the news flow as well. What is interesting for me is that euro and sterling pairs have all shifted into their kind of STAM 1, STAM 2 buying environments. That's kind of interesting when you consider where we were a couple of months ago, where basically sterling and euros getting sold off across the board. That has shifted, and I wonder if that is a reflection of that overall. The overall sentiment is that people think the war is coming to an end, and that has an impact in terms of that sort of risk on mentality. Certainly that kind of risk on mentality has had a huge impact in indices and commodities. Look at that, okay? It's a bit of all green giddiness there from this weekend. All of them in strategic buying, okay, environments. Strange enough, the only ones that aren't were oil and a tactical short, and gold as well. VIX, having traded at above 30 a couple of weeks ago, okay, is now down beneath 20. All right, that's bullish. And Bitcoin has been sort of into early bullish tactical environment. We could look at that in a moment. So overall, that's pretty interesting. All right, pretty interesting. I think most people are kind of, I would say, risk on. Hence why the sort of events over the last 24 hours, maybe people are a little bit sort of just looking at what the score is, waiting to see some follow through and direction this afternoon with what's happening. But certainly, equity indexes, went absolutely full on bullish, and as we will look at in the live charts, S&P and stuff went to new highs, went north of 7,000. During major conflict. That's probably just a reflection of the kind of madness that we see in the world at the moment. If I just quickly look at the very latest, okay, strength, trend, and momentum within those markets. Okay, this is the plugin that people on BTP stage 2 get to use. Definitely what we can see is that kind of that Aussie strength still remains there, kind of risk on, and what you see with that is a kind of euro and Swiss franc in second place, followed by Canadian dollar. Sterling's there, okay. A lot of that is the sort of the 4-hour charts falling away, and I'll be intrigued to see if there's any reflection of that this afternoon once Starmer speaks, and then propping everybody up at the moment is a case of with the sort of the what we see in terms of dollar, yen, and Kiwi dollar at the bottom of the pile. Just looking there, I think there's a couple of messages there. Okay, I'm hoping that. No problem. All right, thanks very much for joining us, Pete. Okay, have a good session. Let's just get back to this as we go. Okay, so bear with me for a moment, ladies and gentlemen. What we're going to do is I'll switch across to the live markets now, and let's have a look at some of charts of interest to help us. So just bear with me for one moment, ladies and gentlemen. Okay, so hope that you can all still hear me. Hope that you can see the sort of the charts now. These are the charts of interest. Okay, so every week I put up a few just simple charts off the normally invariably off the weekly chart, just to give us a few charts of interest that you might wish to sort of add to your watch list. Last week we kicked into earnings season. We had a lot of the financial companies, reporting some really good numbers there. That was one of the things that contributing to pushing us to those kind of new highs on S&P and elsewhere, just feeding that overall risk-on mentality. This week, in particular, there's a lot of aviation and defense stocks, that we're getting to see, all right, which we'll look at in a moment. But we also have Tesla, Tesla have their earnings on the Wednesday after the close. So what are we looking at with Tesla? Well, I think overall people would look at that they're under pressure from demand for EVs softening, and also kind of a bit of rising competition particularly out of China. That all has an impact on margins, all right? They remain under scrutiny, as they have to go through sort of, they're in a position between like price cuts versus volume growth. Then you've also got that feed through into sort of the whole AI stroke autonomy narrative. That sort of, whilst that might support longer term valuations, the near term for Tesla, it's all about execution driven. And, really, what traders need to be aware of is that Tesla is highly sentiment driven, all right? So you get sharp moves around delivery numbers and the AI headlines. They all have that impact there. Certainly when we look at the price, here we had invariably, having tickled the soft underbelly of $500, we have drifted down all the way through sort of 2026. And then, as you can see, last week, even Tesla caught a piece of that war off risk on giddiness. We pumped our way there from $350 to, $400. Pre-market's down a little bit. That's probably just, as I said, some of that sort of nonsense with regards to the overnight shenanigans with the Straits of Hormuz. But that's a pretty bullish move. And if the numbers are good on Wednesday, well, I'd be wanting to see us consolidate above that 400 level, and perhaps also above that 20 period moving average. If we get above that, to me, that would be bullish. And then if we are bullish and if there is sentiment, well, then you're really looking for us to move back towards those highs at $500 there. So as I said, Tesla reporting Wednesday after the close. Watch and see how they play out. Next, we have Boeing. As I said, a lot of aerospace and defense companies this week that are reporting. Those of you who've joined us for the Monday market update over the years will know I'm not the massive or not the biggest fan of Boeing in terms of the way they conduct themselves or the way they have managed to really play US port belly sort of procurement and lobbying. Their strategy has done them very well and has kept them out of an even darker place than they might have been. But there is still focus on Boeing in terms of production qualities, safety scrutiny, etc. They seem to be getting on top of their kind of recovery of cash flow, but as with all of this, it's a little bit of a kind of regulatory oversight that takes the biscuit. What they have done is they have benefited from some of that strong global aircraft demand that has occurred recently. I think Boeing, I would still look these as a risk stock, as in any issues with regulatory issues or safety news issues, they can move Boeing quite aggressively on an intraday basis, and that's why we see some of these quite vicious swings in there. But looking at this at Boeing as the chart, we had pushed to, let's say, recent highs and then printed that really lovely weekly bearish key reversal, drifted our way back, south of recent lows, south of 200. and found support at the weekly 200. Not only did we find support at the weekly 200, but what we saw there was that a nice bullish engulfing candle, bullish key reversal candle off the 200, back through 200. And over the last couple of weeks, as I said, as a little bit of that end of the war risk on giddiness has pervaded, we have seen it push its way there. We're back north of 50, closing north of 20. And then they have, as I said, their earnings out before the open on Wednesday. So I'd be watching to see if those numbers support this. For me, it needs to hold up above the 20 and the 50 really for it to be bullish. That's the way I would be looking at. So see what the numbers bring us, and then see basically how we finish this week. Does it give us bullish confidence? Okay, to continue to be on the bull side with Boeing for the moment. Another defense stock, here we go, LMT, Lockheed Martin. Now, these guys are interesting, and we'll look at the price action in a moment. Naturally, like most of these companies, they have been supported by kind of global defense spending, particularly kind of NATO-aligned budgets over the last couple of years. They do have a strong order book, and naturally, that is implicated by the current geopolitical tensions. Then you're digging into the actual company itself, and you're looking at, well, do they have stability of their margins? What's their cost pressures? What are their kind of contract structures are they working under at the moment? There will be lots of people who would see Lockheed Martin as a bit of a geopolitical hedge, all right? And not unsurprisingly, it tends to catch bids on escalation headlines, which, as you can see here, okay, is what gave us this, fabulous run from $450 all the way up here to just under $700. But interestingly, here Monday, 2nd of March, remember is the 28th of February, that kind of weekend was the start of operations in Iran, and really Lockheed Martin has been on a one-way ticket since then, hasn't it? From just under $700 to now south of $600, just running into that weekly 20-period moving average, which, to be fair, acted as really nice dynamic support here. But these guys are reporting, I think, Thursday morning before the open on that. Naturally, people will be interested to see if there are good numbers, if there's good data. Does that help support it with the 20 and 600? Does it get it back up above 600? In which case, I'd be seeing that as bullish. But if we can't basically get back up above 600 and we slice through that 20, well, then I'll be looking for a much deeper retracement, much deeper. So we are in an interesting point here. We're at a big round number. There is dynamic support running up. We have really had 1, 2, 3, 4, 5, 6, 7, 8 weeks. Okay, what is that? Six bearish weeks, one sort of, you might say bullish or reversal, which just failed. That has been a kind of the directory of travel there for the last couple of months. Does the earnings on Thursday arrest that, or does it accelerate it? Hence why it's on our list to keep an eye on. Next one, GE Aerospace. Okay, General Electric Aerospace here. So of course, these guys, were broken up, all right, and now they focus on, aerospace, including the name, isn't it? And that's what they're really looking to see is, can that focus on aerospace? Can that drive kind of an improvement in their earnings quality? Not unsurprisingly, as we just said there about Boeing, there is still strong demand from the commercial aviation cycles. Okay, I'll be intrigued to see whether that maintains or whether this kind of summer of discontent from avgas shortages, does that have an impact on that? But what you also have to realize is these guys, okay, they benefit from sort of long-term servicing contracts and overall engine demand. So as you can see, GE has been in a pretty great trend, really, a pretty great trend for a couple of years now. And what we've seen is big round numbers, okay, and the 50-period moving average acting as really good support. Once again, interestingly, into the end of February, we pushed to new highs, and then we printed that. I look at that as an evening star formation. We've pulled back to the 50, and then last week, last 2 weeks, we've had that kind of that sort of war off risk on giddiness, bounce off the 50, back up above $300. Last week, we've got PO20 going on there. We could not get and close back up above the 20, which has been a significant moving average. So I'd be curious to see, are we now trapped between the 20 and the 50? All right. They report Tuesday before the open tomorrow morning. Can that break us out of this? I would say this kind of almost this like this squeeze that is building around 300 beneath the 20, above the 50. Are the numbers there going to be good enough to get us a punch out of that? And if so, which way? Good numbers, we get back up above the 20, okay, and hold above the 20, or bullish to me. Bad numbers, we're south of 300, and then we're looking, can that 50 act as support? It has done. It has done. Can it do that? So, as I said, they report tomorrow before the open, and it'll be interesting to see, as I said, whether those numbers are the catalyst for the next move in GE. And another one on that defense spectrum there, RTX, Raytheon are always going to be known as Raytheon to me. All right, so RTX exposure to both defense and aerospace. Okay, so it gives them a bit of dual cycle support. There have been some issues with engines, the Pratt & Whitney engines, who make up part of the corporation these days. But I think a lot of that is kind of priced in. And not unsurprisingly, there has been huge demand for missiles over the last couple of months. All right. So if you want a missile, an American missile, the reality is that, if you want, a Patriot, a Tomahawk, an AMRAAM, a Sidewinder, and a whole host of others, there really is kind of, he says, kind of only one game in town, and that's Raytheon and stuff. And not unsurprisingly, in the last couple of months, everybody's been shooting them off, spraying them like machine gun bullets. That will mean that there should be basically good demand going forward to replace those stocks. If that is not already occurring, I suspect it already is. But when I look at the price action there, once again, we're pushing up, and that this has been a great trend, and we've talked about this. Once again, it kind of peaked at the start of the war. We've kind of pulled back, really nice bounce off that 20 period moving average, and we got above 300. Now we thought, well, maybe this is us pushing our way back up to those recent highs around 215. But interestingly, last week, giddiness for overall markets may not necessarily be giddiness for defense stocks. And we found ourselves, back beneath 200. Pre-market's pretty much still beneath 200. Once again, all right, these guys are reporting tomorrow morning, and we are caught a little bit, I think, between the big round number of 200 and the kind of dynamic support of that 20 period moving average. Do we get good numbers? Well, the 20 acts as support, and we push our way back up to 215. Okay, that's what I'd be looking for. That would be my scenario for on the bullish side. On the bearish side, we don't get back above 200. We break the 20, and then we get a deeper pullback into that kind of 170 space. But so yeah, hence once again, it's running into where it's into a catalyst moment where it'll be making a decision. So add that to your watch list. And then finally, before we look at the live markets, as I said, a lot of defense companies, but also aviation. This is one of them, AAL, American Airlines, right? Not unsurprisingly, as an airline, they are highly sensitive to fuel prices and consumer demand trends. Okay, and we are, there is a squeeze already occurring and likely to occur over this summer of discontent with regards to the fuel prices and consumer demand, all based upon the kind of war with Iran. In terms of its balance sheet, they're still very leveraged versus their other airline peers, and that kind of limits their flexibility a little bit. But they had been benefiting from strong travel demand and benefiting from okay margins for their airlines. But as I said, we have to wait and see whether that is impacted over these next couple of months. I would look at these guys, as most of those American airlines, a bit of almost like a macro sentiment play. All right, risk on, risk off, war on, war off, and also not unsurprisingly, the oil it drives those price actions. And so when I look at the price action here, the weekly chart, we can see big round number of $10 has acted as pretty good support over the years, hasn't it? I mean, even when we came down here, okay, recently, dropped our way down and found support there. And as you can see, kind of last week, we had that risk on giddiness bounce, okay, which got us above the 50, but not above the 20 and 200, up to $13, which, is a good sized move in this particular stock. But what we can see is already the pre-market down to 12.37. These guys, They are releasing on Thursday before market, and once again, it will be interesting to see whether these numbers, whether they reflect any of the, let's say, the kind of the worry and concerns regarding, stability of not only stability of supply of oil, but also stability of the price, and also stability of consumer demand. Has it just rug pulled that all of that consumer demand? So, as I said, it had a bit of a bump this week or last week. Sorry. The question will be, does it give it all back this week? Okay, that's what I'll be looking at. Okay, so as I said, they released Thursday morning before open, and you might want to add that to your watch list to see how they particularly play out on that. Okay, there we go. So there's some charts of interest that you can add to your watch list. Let's now have a little look at the live market and see what's going on. So just bear with me one moment, and we'll switch across. Okay, so we're here on my dollar charts here. Okay, so let us just keep that up here. We'll go with here whilst we're here, right? And then we'll look at the indices. Listen, Aussie dollar on the 4 hour, Euro dollar on the 4 hour, cable on the 4 hour, dollar Swiss on the 4 hour, Kiwi dollar on the 4 hour, dollar CAD, dollar yen, and as always, dollar index. Okay, whenever I'm looking at FX markets, I always want to start with looking at what's the dollar index telling me. Weekly chart, last few weeks, no surprise, fallen away from 100, okay, as that sort of war off risk on sentiment has played out. Last week, we closed beneath the 50, okay, we closed beneath the 50, we've gapped up into it to the start of this week, but, it's not insignificant that we closed beneath that 50. The question is, can it keep it that this week? If we look at the daily chart, 31st of March is going to look back as a really interesting day. There we were at 100. Big bearish engulfing candle, key reversal candle, worked our way down, and then what we've seen here is we got beneath the 50 and the 200, but actually, as you can see, Friday, having pushed our way down, we've had a little bit of a bump up. The 4 hour chart, okay, at the end of it, there we have, we gapped up into the 50, and we've come down into the 20, and so price is a little bit constrained, I'd say, there between the 4 hour 50 and the 20. And I'll be intrigued to see, right, how does the American market open? What kind of commentary do we get, not only from the Americans and both from President Trump, but also from the Iranians? And will there be more conversations, okay, this week, all right, in terms of making a breakthrough in terms of a longer, more permanent ceasefire? So, yep, we gapped up, but we've kind of, we've drifted down there. Is that an indication that actually overall market sentiment is such that the people think that was just a little bit of a kind of a speed bump, the direction of travel is towards, a more permanent ceasefire. Let's see if this 20-period moving average holds. That's what I'll be intrigued to work with. And that's kind of just reflected, all right, that is reflected on all of those kind of major dollar pairs. Gap down, but actually pull back, okay? Gapped down, excuse my drawings, but pulled back. Euro dollar gapped down, but actually have worked our way up here, okay? Even dollar against Canadian dollar has worked our way. We've started the week with cable that way. Even dollar yen is more kind of sideways, all right? Dollar Swiss is just kind of a little bit sideways as well. But, I wonder whether that, as I said, is a case of the American market will kind of shrug off that gap, that negativity, and just plow its way forward a little bit like it did last week. So what we'll do is, because I appreciate overrunning a little bit, we'll have a little look at the STAM indices and commodities, and then we'll have a look at sterling. We always finish off on sterling just to bring it to a close. As I said, I apologise. The last couple of months I've overrun in the sessions, but a lot of that is just to do with there is so much going on in the world that I particularly just want to try and share with you. Some indices charts here, okay. So we've got Dow, okay, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. Okay, so oil's the story, isn't it? Okay, and you can see that 4 hour chart there. How we, this is West Texas. How we drifted our way down, really, from starting last week up at 105, 106 to finishing the week there. Okay, around about 84. Once again, we've gapped up, but interestingly, you know what? If you look at that into the European session, overnight Asian session, European session, we've pretty much just gone sideways there, haven't we? We haven't filled that gap, all right? We've just gone sideways. People are just waiting for to see what the Americans do when they open up. That's the way I would be viewing that. Interestingly, as we said, just look at that. This is S&P 500 on the weekly. Bang. That is war off, risk on giddiness, just ploughing its way back up to highs, closing above 7,000. You know, that's just quite some move, isn't it, ladies and gentlemen? Absolute storming move there. Okay, the daily chart is just showing it that last week, bang. You know, and will that continue this week? Okay, will that continue? That is just, you know, it's just that bullish move, and you know we can see it. Dow hasn't followed through to the highs, but NASDAQ certainly has as well there. Okay, it's pushed its way there. It's been a really strong trend there, as has Russell. Okay, Russell as well, just basically closed out new highs there. That's quite something, isn't it? Quite something when you consider we have had tariffs, and major war, and we have pushed, in 1 year we've pushed from lows to new highs. That's just that's the world we live in. Interestingly, if you look elsewhere, DAX, I was curious that last week that giddiness hadn't followed through above the 50. Well, it did last week, and we pushed our way, and you'll be looking at that as kind of that bullishness there. Okay, this is the daily chart here. We're above the daily 50, 200 there. Okay, so even those European indexes are pushing their way higher, closer to home. FTSE, okay, is also pushing its way, okay, up towards those highs. Will there be any impact based on those kind of malingering political shenanigans with Starmer et al? We shall have to wait and see. Okay, we'll have to wait and see. All right. Looking at the UK gilts, okay, considering the pressure that is building on Starmer, the gilt yields have continued to sort of loosen a little bit. Whether that is just markets realizing that he's unlikely to get kicked out before the local elections, which I think are the 7th of May. Whether he's basically going to stay till then, and then he'll take the can for a poor performance in that. That's always been my view since the start of the year. But in terms of FTSE, interestingly, kind of FTSE is just having run its way up. It's just kind of going a little bit sideways there, isn't it? A little bit sideways, and not much to get excited about there in that sense. We look at a couple of the commodities. So gold, people are interested in gold. There's been some fascinating swings on there. The way I look at gold is, having made that kind of war lows, should we call it that, we're back up above the 20. We're back making weekly higher closes. Okay, there is demand there. Okay. We're interestingly just underneath, just underneath that daily 50. I think if that daily 50 goes, then 5,000 is on its way, and if 5,000 gets above 5,000, well, that's we're back then pushing towards those highs that we saw. But that has been, if you look at that, has been quite some significant swings there, haven't it? In that particular sense, ladies and gentlemen. Probably what's been more clear as silver. This is silver on the daily chart. Okay, silver. We were, when I spoke a couple of weeks ago, we were sort of just pivoting at around $70, but you can see the lows around that supporting trend line. Okay, of those lows, and now bang, here we are at 80. And whether that is a reflection that kind of wore off, risk on. Demand for silver, okay, industrial demand for silver increases, and that pushes us back up above 80. Well, it has been a clearer move there from silver, hasn't it? Quite clearly. Bitcoin as well. Bitcoin, we talked about this. Here we go on the weekly chart, having fallen away. It's coiling up there, okay. Pivoting, I would say, around 70,000. That's what I've been looking at, and as you can see, it's kind of starting to work its way out of there. If I go down to the daily, as I said, coiling up, pivoting around 70,000, back up now. I'd be looking, well, does it have what it takes to get up towards that daily 200 at 85,000? Can it just come back, use this trend line, all right, flip it from being resistance to support, and then a shove up to 85,000? That would be a very much a kind of risk-on world that we live in. With that, I would suggest. Okay, so that's them. And as always, let's just finish off a little bit with sterling. As always, as I said, I appreciate we overran a little bit. I'm just trying to share so much with you. Cable on the daily, euro sterling on the daily, pound Aussie on the daily, pound Canadian, FTSE on the daily, which we've done, pound Kiwi, pound Swiss, pound yen. Okay, that's what we're looking at. What's the scores on the doors? Interestingly, when I look at cable, having had that kind of war off risk on push, if you look at the price action there over the last couple of days, a couple of really nice bearish, bearish key reversals, bearish engulfing candles, bearish pin bars, price action combinations that are going there. And then we did gap, but we've pushed our way up there. Okay, this morning, looking at it, was kind of working its way here on the 30-minute chart. We came up, filled the gap. We moved down, I kind of shorted it down once it filled the gap, and then we've kind of worked our way back up there. So, this will be taking its lead from A, the American Open, and B, whether Starmer implicates himself in his collection too, or rather his report to the Parliament. I think it's at 3 o'clock this afternoon, and my view would be that he's already implicated himself. It's just waiting for everybody to catch up with that. Pound against Japanese yen, once again, that fabulous run there that we have seen, that's pretty much come to an end there, hasn't it? That 4-hour chart, I was looking at this, it was a great trend. And then, this, for those of you who are like Stan Weinstein, you might be saying, well, Paul, that was kind of stage 1. We broke out of it. Stage 2, that's now stage 3. Okay, and are we now going to get a stage 4? Does that 50 on the 4-hour, does it hold? Okay, in which case then maybe you get another stage 2 move. But if it breaks, well then I think you're definitely into sort of stage 4, pulling back to that 200 period moving average. So yeah, once again, that's at a place where you might just want to watch and see how that particularly plays out with itself there. Pound Swiss has just been miserable, really. If you look at that for the last couple of months, okay, or last sort of month or so, look at the price action there. Fabulous on intraday mean reversion trades, but if you're a swing trader looking to try and get some swing positions, that's not been the easiest to work with, has it? Euro sterling's been a little bit similar to that. If we look at this as the daily chart, having had a couple of bit of a swings there in March, April has not necessarily been terribly joyful, I would say. Once again, if you're trying to get a swing position, what you might say is, well, Paul, is that a little bit of a very, very scruffy kind of bull flag shaping up? Or is it, as I might have intimated before, is this just a kind of a cup and handle that's looking to build before it breaks out? If I'm honest, I wouldn't know, but I will just be watching that daily 50. All right, if that daily 50 continues to act as support, great. But equally, what we are is there is price and all the moving averages coiled up. So invariably, when that happens, it's about to sort of just break out somewhere. And there is a lot of sterling data this week. Okay, a lot of sterling data this week, and maybe that and the Starmer could be the catalyst for some moves in sterling later on this week. Okay, there we go, ladies and gentlemen. Let's draw it to a close there. As I said, I appreciate that we overran a little bit, but yeah, there's lots for me to share with you going on at the moment in the world. As always, make sure you're on top of your risk management. Make sure you're on top of the news flow. Make sure you're on top of the order flow. Have yourself a fabulous trading week, ladies and gentlemen, and I will see you next Monday for the next Monday market update. Have a great week and trade well, everybody. Many thanks. Cheers.